Well, 2013 marked a dramatic economic turnaround for Japan thanks to Prime Minister Shinzo Abe's policies known as Abenomics. And for more insight, we're now joined by Ed Rogers, CEO of Rogers Investment Advisors, live from Tokyo. Ed, thanks for joining us again tonight.
Good morning, Michelle. Thanks very much for having me on the show.
So a very impassioned speech by Japanese Prime Minister Shinzo Abe in Davos. He said that he would, quote, act like a drill bit to cut through red tape and break down obstacles. What do you think was the most significant takeaway from his speech?
I think there are a couple of key points to note. First of all, if the Japanese Prime Minister is coming out saying, we think wages are going to go up and you're going to see it sometime this spring, the way Japan works, that's probably a done deal. You can expect to see the increase in wages across a number of industries and a number of companies that will be industry leaders, and that will set the tone, again, for continuing this march towards 2% inflation. And the biggest takeaway is we are making progress towards that goal. We continue to make progress towards that goal.
He did say we're continuing to make progress, and Abenomics certainly have worked, but he didn't actually introduce any new policies. He did not discuss any substantive details or have any specific numerical goals for existing plans. And investors and economists have really been waiting to see some specific numerical goals as signs of his commitment to strategies for growth. So what do you make of that general vagueness?
Well, the biggest problem he has is that by calling it three arrows, and arrows number 1 and number 2 are pretty simple to follow, print money and spend money. Arrow number 3 is, we believe, more of 1,000 darts. There'll be a number of incremental changes and incremental improvements. We looked at TPP. Progress in the TPP will be critical. Improving, if you will, the economic structure in some of those sacred cow areas of subsidization in agriculture, for example. Some of the sacred cows are going to have to die here. It's very hard to, but it's not one silver bullet. It's not actually a third arrow. And we believe, again, talks are going on in the background. Where you'll see evidence that there's been successful talks, again, is when the Prime Minister says at a place like Davos, we think wages are going to go up. Guess what? That pretty much means that conclusion, that conversation has reached its end. Wages are going to go up, and you'll hear about that shortly.
Well, one of the things that really tended to overshadow the situation in Davos is the tensions between China and Japan. Abe called for military restraint in Asia. He defended his visit to a controversial military shrine. So how are these tensions impacting Japan's economy?
There's no doubt they are having an impact. We're all quite concerned about a regional Asian arms race and the extent to which that would detract from the very important, what we believe, very important focus government should be having on creating competitive regional and global economies for the 21st century. A lot of money can be wasted on military buildup, and that will be very unproductive. The boots on the ground effect, of course, as we saw in China, is certain Japanese products, for example, will get very out of favor. Certain Japanese companies get very concerned about trying to do business there. But I can tell you, boots on the ground in Japan, the number of Chinese tourists, for example, in this country is only going up.
Really?
The man on the street, absolutely, absolutely. There's no doubt about it. In fact, this is the largest year for tourism in the history of Japan. We're going to be over 10 million tourists coming to a country of 126 million people. It's an incredibly high number.
Yeah, so not translating into the general sentiment of the population. I also want to focus a little bit about what the Bank of Japan said today. And the Bank of Japan dismissed the need for additional monetary easing in the short term. And there were expectations that there would be more stimulus ahead of that April sales tax. What did you make of that decision by the BOJ?
We think that they're ready to act if need be. We're waiting to really see what the effect of the sales tax will be. And by the way, again, we believe their agreements have already been reached on increasing wages in multiple industries that are leaders. And so there is going to be maybe just a circular effect here. We're putting more money into citizens' pockets through higher wages, and then we're taking a little bit back through the increase in the sales tax. We're really not sure what the net effect will be. Our view at Rogers Investment Advisors, quite frankly, is this may be much ado about nothing. This is kind of a Y2K issue. We've all seen it coming. Everybody's done that internal calculation. It probably will not affect the broad progress towards the 2% inflation rate, in our opinion.
All right, great to see you as always, Ed Rogers. Thanks for joining us. Ed Rogers, CEO of Rogers Investment Advisors.